Good morning, traders. It's 8:01 a.m. Chicago time on Wednesday, the 5th of January, 2022. Yes, I do know what month it is. Um, Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Just a quick mic check if you have a moment. Let me know if I'm coming across clear, strong, deep, sexy, scrawny, whatever it is. This is episode number 2145. We're going to hop on right over to the convergence trading pre-market summary sheet here, and we're looking at a market that has a mixed picture. The S&P is basically unchanged, down about 4 basis points, and so is the Dow. The Nasdaq is off, showing the Nasdaq closed relatively strong yesterday as opposed to pulling back like the S&P did, and therefore it is down 64 points from settlement, and it's off 41 basis points. The Russell is up a little bit. It's interesting. Yesterday, the Russell basically went in the opposite direction. The Dow yesterday was relatively strong against the Nasdaq and anything else. And of course, it's still flat for today. Again, Europe coming in pretty relatively strong today, up 66 basis points on the Euro Stoxx 50 and 85 basis points on the DAX. The pre-market has, the activity for earnings is going to start to get nice and thick here as we start the year. Today we have RPM International with 1.64 billion in revenues, missed EPS by 4 cents or 4.82%. So surprise to the downside. Revenue was relatively strong. So earnings were low, revenue were high, and it's not a huge company. Remember, I filter all earnings to companies that are 1 billion or bigger in estimated revenue. On deck today, the ADP employment figure, or payrolls, came out strong. 807,000 new jobs versus 400,000 according to this private payroll processing company. This is a big surprise, more than doubled what is already a high estimate. Just as a comparison, the prior ADP release was 505,000. Consensus was 400. We got 807. Forecast was 495. So what this acts as is a forecaster, a potential forecaster for Friday's unemployment figure for the U.S., which is a key figure for the economy. We do have FOMC minutes today at 2 p.m. Crude oil market and so on. You can see it on the screen there. That's what's on deck for today. Turning our attention to the S&P. The S&P's traded 163,000 contracts this session. The S&P has 84% of its volume below settlement, so inventory short 84%, 21 points of range, 21 and a quarter. That is quite normal, nothing to highlight there. And the point of control is at 47.80, which was relatively close to where we had it yesterday. Let me double check that. Yesterday's point of control, 47.95. 47.95 is the overnight point of control, actually lower. So that's what we're coming into today. Nothing special to talk about. It's a mixed open. We're trading inside of yesterday's range, a balanced profile, balanced auction this morning. And that brings us to reviewing what happened yesterday. Here's what happened yesterday as we look at yesterday's action. We had an open auction out of range. We traded sideways with an upward skew. The market kind of skewed upwards. We made a new all-time high. We took out the overnight high, which was 48.07 and a quarter, something like that. Let's see. Oh, 4807 and a half. My memory's failing by a tick. We took out the overnight high, but what was significant about yesterday, and the short side became obvious to me, and I narrated a short trade in Convergent Trading's Head Trader channel for members. What became obvious to me on in yesterday's open is that we had a gap. It did tick down, push down to 47.99. Remember, we opened at 01 and a quarter, and it pushed to 99, and then it found a bid and it rose up. The problem with the rise up was it was completely overlapping, was consolidating. There was no aggressor there. There was no conviction from the market. In a gap and go situation, I like gaps, and there are two types of gaps, just to quickly review in case you haven't been following for a while. There are two types of gaps. There are internal and external gaps. An internal gap is a market that opens inside of the prior range, but it opens at a different price, and it almost always, in fact, it always opens at a different price, and has a 99.999% probability it didn't open exactly where it closed yesterday after the overnight session has occurred. This is RTH only. So we get an internal gap when we open at a different price than where we close. That difference is an internal gap inside of the range. When we open outside of the range, like we saw yesterday, yesterday's high was the prior session's high is right there, and we opened right up here. Two things to keep in mind. The fact that it opened in a gap is important. It tells us that the auction may be going into imbalance since it's moving away from the prior auction. And then we note down what the gap mid is. And the gap mid is the difference between yesterday's high, in this case, and the open. And that becomes an area that we're looking to test. And that test occurred right there. You can see it pulled back to the gap mid and shot straight up for a push before selling off. What happened yesterday is it gapped into new all-time highs. Very, very clear gap. So we expect a gap and go situation. Gap rules apply. In other words, if the market does not become responsive right away, then we're trading in the direction of the gap. Those could be very big days. But it didn't do that. And at the same time, the NASDAQ was tumbling. If you look at the NASDAQ in the first half-hour trading, it was in a downtrend and it was breaking lower. And the NASDAQ had beautiful setups yesterday, breakout setups. I talked about this also in our trade talk for Convergent members yesterday at 1 o'clock and in the live stream. And so it was falling off, but the S&P was really holding up there. The Dow was really holding up there. And then once it fell below the mid right here, this was a short setup. This was a short setup at 4804.50, which occurred, I believe it occurred right here. Lower high, NASDAQ falling. Breadth is starting to turn over, looked short, beautiful setup, and the target for the setup is the gap mid, the prior high, the gap mid, the prior high. We do have a naked point of control here, and then we expect that if it does get inside of the prior day's range, we expect it to test two things: settlement and the prior point of control. And unfortunately, once it fell into the gap mid, we had this impulse higher. Back to 4806 and a quarter. It was a shakeout, frustrating, but this is very common in a balanced market, which is what we have. And then it finally breaks through. The next opportunity is a pullback to the full session mid and the IB low. That sets up another short, which I didn't take. I wasn't attentive. In fact, I was in a call. And then it accomplished its target. It got to the prior session high. It got to the settlement, which was around the VPOC, the prior day's most traded price is the VPOC. And then it pulls back to the first low volume node here in the 73 area. The next big area to test is the 70. So if I turn on the master levels here, you'll see at the 70, the 4770 is the MC point of control. This is the most traded price in this region. That's the balance price. And so that becomes the next target. So some really decent setups after this got done. Basically, this segment here, there was a fair amount of chop before it started to climb again. And I found that the afternoons recently have been more less telegraphed, let's say. And so we ended up finishing outside of the initial balance in range. So you can see the market closed right there in range on what is an elongated profile. We do have good volume. We traded, I think, 1.1 million contracts in RTH, which is solid volume. And we have pretty good range. So this thing traded from 48.08 to 47.64, about 44 points. And if you recall from our stat sheet, the range can be up to 45 points. 45 points. We got 44 statistics are holding, and it basically expanded as far as it can probably expand for it to be a normal day versus a trend day. A multi-distribution elongated profile is telling us the market's actively discovering price, which means that we are likely to move into the next session to do more price discovery. So when the market leaves an elongated volume profile like that, it's basically saying that it's not in balance. We are actually in balance in the bigger picture. We talked about that yesterday. I showed a composite profile, market profile, to show that we've been in balance. We broke higher and we got back into that balance. But it's a pretty good volatility within a large balance zone. The market's still discovering price. There's a lot for the market to consider and price in. And I expect that to carry over and give opportunities to day traders. It's kind of a noisy trade for investors. Yesterday closed below, a couple points below, settled a couple points below the day before. So to somebody who's investing from day to day, it looks like it didn't go anywhere, but you can see there's a fair amount of opportunity intraday, which is why I prefer the day trade. Overall, the delta was negative. The aggressors were sellers. There was a pretty decent rise in price, and we almost got back to the open, which should bring our delta back to zero, and you can see the delta was weak. So this was a drift back up to the initial balance rather than lifting. So what we have here is a market that is not really, despite making new all-time highs, is not really aggressive about it. It's in a holding pattern. We'll see how the market responds to the minutes today to figure out what the next piece of the puzzle will be. The overnight session, completely balanced. We are trading right now. We're trading in between the prior settle and the overnight point of control. So between 83.75, which is the prior settle, and the 80. Remember, the MC point of control is at 70, and the low is at 66. So we basically overnight retested that MC point of control. So again, more evidence that we are trading in balance. So we rejected this new high in the RTH. However, we didn't shift that point of control down. We didn't trade enough to shift that point of control down. And so this is likely to remain a drag or an attraction or a magnet to the upside. Coming into today, really, it's hard to conclude what is what and what's likely to happen here. If we look at the bigger picture, let's add today to this composite. If we look at the bigger picture, we keep testing down. Look at that tail and then bouncing back up. Yesterday, we tested down. Here, I don't know. Do you guys see how that candlestick looks? Let's expand it quite a bit. So you can see it is testing the tail, it's testing down, and then it's being bought and brought to the towards that 4,800 all-time high area. It's testing down and it's being bought in the afternoon towards that all-time high area. So above 4,800, no buying pressure, and below 4,800, below 4,770, in fact, no selling pressure. And here we are in the middle. So there are a lot of people watching and waiting to see what the next play is. We remain in balance within last week's range, as you can see here, and that's an important piece to take. We've shifted the weekly point of control just slightly up from 47.77 to 47.83-ish, 82-ish, and we're trading right on top of it currently. The market is in balance. So as we open, it looks like it's about to take off or wiggle. Just understand that the bigger picture is it's not going anywhere, and it's not really getting follow-up to what it's trying to do. So don't get suckered into thinking that you should expand your risk or give it more room or cancel your stops or whatever and let it play, because it's likely to whipsaw back around. We're not seeing a directional bias. Look at these 3 days from last week, non-directional. This day here just poked up, down, and then finished down. So a finished week. The next day, Monday, took it back up. Yesterday, we opened high, tested down, and came right back to the middle, and I'm expecting more of that. The minutes may push us around, but I think the last FOMC decision and meeting really met the market's expectations, so I'm expecting the minutes aren't going to have any surprises, and if there are no surprises, there's nothing new to price in, and so therefore I expect the market to remain within this range. That's the bottom line. So that's a summary of where we are. Let's take a look at what's expected for today. But first, I want to invite you to attend a live stream on YouTube. You do not need to register for this or anything. It is hosted by Anthony Crudele for Futures Radio Show. I'm going to be on for the beginning of the year broadcast or live stream. I've done this with Crudele, the first stream of the year, the opener. I've done this with him for about 5 years in a row now. I think very highly of Crudele and his experience, not only in futures. We basically started trading around the same time, him in the pit, me electronic. And then he's shifted into crypto trading, crypto futures and spot and so on. So he's a very well-developed trader. And then we're going to talk about fear, the role of fear in trading, and how fear kind of causes us to lose our discipline and to do some weird stuff, right? So because this has to do with mindset, Jared Tendler is coming on to discuss his aspect of it. We'll be talking about the role of fear in trading and the lack of confidence, which the fear in trading and lack of confidence kind of go hand in hand a little bit. That's at 12 p.m. today. You have the link in the YouTube live chat, but you can also connect by going to go-to ct.pro/2022-opener, all lowercase, to attend live. Again, that's at 12 p.m. today. Please be there. We'll be taking questions. I know this is a big issue for traders, and we want to start you off, start the year off and start you off on the right footing. What are we expecting for today? Let's highlight our key trade of the day. Note, we pushed right into RTH mid and VWAP yesterday and came back off. We are stuck, despite the where we closed, we are stuck at the lower end of yesterday's range. To me, this looks like the prices up above, as I said, have been rejected. We know the prices below the 70 have been getting rejected, and therefore I expect an open auction in range today. An open auction in range of yesterday, price discovery profile yesterday, and I expect the work to continue today. The main expectation is a quick push down. I expect us to squeeze this 47.87 and make a run for the 4,800 again, retest the 4,800. I expect us to falter until the FOMC minutes, and then later on squeeze a little bit higher. The target remains the 48.15 measured move under scenario 1. But I expect a lot of this morning to be quite choppy. I'm drawing a bit of a trend here, but I expect us to be choppy with some pretty decent sized whipsaws. So that's the primary scenario. The better scenario, the secondary scenario is, and the primary scenario always follows what the auction has done and where it's going. It is the most likely scenario, although scenario 2 has been playing out a lot because we are in balance. It's likely to revert, and that's what the second scenario is. Second scenario, make an attempt to push to the overnight high, get our impulse down, and I'm looking for that impulse down to start initiating or getting a short bias that I'm looking to lean against something, in this case, the prior point of control or the overnight point of control, potentially a structure that the market creates, a zipper that the market creates, and then look for a run to the overnight low, and then I'm looking for this low to be taken. If this low is taken, we are likely to see acceleration to the downside. Last week settled at 58.50, and then we're likely to retest this 47 again, giving us a pretty decent range to the downside. So I am, despite the fact that we're near all-time highs, I'm relatively aggressive on the short side because we talked about this all last week, the fact that the structure, and I know a lot of you were not here, the market structure that's been built so far is relatively weak. There are a lot of gaps, a lot of thin volume areas. The profiles don't look substantial. So I'm looking for it to, once it turns over, I'm looking for it to accelerate to the downside, to squeeze these weak longs, which is what this looks like. It looks like weak longs at all-time highs. They're just not able to push farther than just poking through an all-time high by 10 or 12 points. Okay, that's what we're looking at for today. I hope that gives you the story, the structure on which you can build your trades today, build your bias, and also the strength to not let go of the trades too soon and not to be fearful. Again, if you are fearful or if you want to just talk trading and ask questions, please attend the live stream today. You'll be able to log into your YouTube account and ask questions on the live stream, and I'm happy to answer whatever you throw at us. Good luck, and I'll catch you at 12 o'clock Eastern today. Take care.